Welcome again to our recorded discussion. My name is Rebecca Makiling. Our topic for today is income taxation on individual. Okay, so there are 5 types or classifications of individual taxpayers. We have the resident citizen, the non-resident citizen. We have also the resident alien, the non-resident alien, engaged in trade or business, and non-resident alien not engaged in trade or business. We have also special employees as repelled under train law, special alien employees, and special Filipino employees. Okay, so let us discuss it one by one. So when we say Filipino citizens, so they are part of the citizens, or we have 2 classifications, the resident citizen and the non-resident citizen. So who are the Filipino citizens? The following individuals are citizens of the Philippines if they are citizens of the Philippines at the time of the adoption of the 1987 Constitution. They are also Filipino citizens if their father or mother are citizens of the Philippines. And those born before January 17, 1973 of Filipino mothers who elect Philippine citizenship upon reaching the age of maturity are also Filipino citizens, and those who are naturalized in accordance with law. Okay, again, we have 2 types, resident citizen and non-resident citizen. So from its word, resident, they are residing in the Philippines. So we need to classify this because we need to determine what are those taxable income of this following individual. So for resident citizen, they are taxable when they have income from sources within and without the Philippines. So meaning if they are residing in the Philippines, they are resident, they are also citizen, and then they have income here, they have business here in the Philippines and business abroad, they are subject for income tax. Okay, now let's go to non-resident citizen. For non-resident citizen, the following are considered non-resident citizen under Section 22 of RA 8424. So a citizen of the Philippines who established to the satisfaction of the commissioner of the fact of his physical presence abroad with a definite intention to reside therein. He or she is also a citizen of the Philippines who leaves the Philippines during the taxable year to reside abroad, either as an immigrant or for employment on a permanent basis. A citizen of the Philippines who works and derives income from abroad and whose employment there requires him to be physically present abroad most of the time for at least 183 days during the taxable year. So take note, 183 days. Okay. Next, a citizen who has been previously considered as non-resident citizen and who arrives in the Philippines at any time during the taxable year to reside permanently in the Philippines shall likewise be treated as a non-resident citizen for the taxable year in which he arrives in the Philippines with respect to his income derived from sources abroad until the date of his arrival in the Philippines. How about the overseas Filipino workers? So when we say overseas contract workers, OCW, or overseas Filipino workers under RR number 1, 2011, they are also considered as non-resident citizen. Okay, so contract workers are Filipino citizens employed in foreign countries, commonly referred to as OFW, who are physically present in a foreign country as a consequence of their employment there. Their salaries and wages are paid by an employer abroad and is not borne by any entity or person in the Philippines. And then to be considered as an OCW or OFW, they must be duly registered as such with the Philippine Overseas Employment Administration or the POA with a valid overseas employment certificate. Okay, a seaman who is a citizen of the Philippines and who receives compensation for services rendered abroad as member of the complement of a vessel engaged exclusively in international trade shall be treated as an overseas contract worker. In order for seafarers or seamen to be considered as OCW or OFWs, they must be duly registered as such with the Philippine Overseas Employment Administration, the PEOA, with a valid Seafarers Identification Record Book or Seaman's Book issued by the Maritime Industry Authority or Marina. Again, we need to consider whether they are non-resident or resident citizen, because only income for non-resident citizen, they are only taxable from all sources within the Philippines. So meaning if they have business in the Philippines, but they are not residing in the Philippines, but they have their own business maybe run by their relatives or run by others, that business is taxable because it is within the Philippines. Next, resident alien. Resident alien means an individual whose resident is within the Philippines and who is not a citizen thereof, meaning he's an American, he's a Chinese, or any nationality, not a Filipino citizen, but they are residing here in the Philippines. So under RR number 2, the following are considered as resident alien. An alien actually present in the Philippines who is not a mere transient or sojourner, a person who comes to the Philippines for a definite purpose, which in nature may be promptly accomplished as transient. An alien who comes to the Philippines for a definite purpose, which by its nature would require an extended stay, making his home temporarily in the Philippines. An alien who shall come to the Philippines with no definite intention as to his stay, so there is floating intention. An alien who has acquired residence in the Philippines retains his status as a resident until he abandons the same and actually depart from the Philippines. An alien who shall have stayed in the Philippines for more than 1 year by the end of the calendar year. So they are called resident alien. How about for non-resident alien? So for non-resident alien, we have two: engage in trade or business and not engage in trade or business. Okay, for non-resident alien engage in trade or business, they are alien individual actually engaged, in they have their business, they have their mm, yeah, they have their business in the Philippines. They have some branch. So they are considered engaged in trade or business. An alien individual who shall come to the Philippines and stay therein for an aggregate period of more than, take note, 180 days during any calendar year. So that is 180, so 6 months, during any calendar year shall be deemed a non-resident alien doing business in the Philippines. They are subject to income tax in the same manner as an individual non-resident citizen and resident alien on taxable income received from all sources within the Philippines. So meaning they only income that derive from within the Philippines, they are subject for income tax together with the resident alien. Okay, how about those non-resident alien not engaged in the trade or business? Uh, they are not included in the engage in trade or business, uh, the first classification of the non-resident alien. So they are alien individual who stays in the Philippines for an aggregate period of more than 100 of not more than 180 days in any calendar year. If it is more than 180 days or 180 days, 6 months, so that is already engaged in trade or business. So lower than that, they are not engaged in trade or business. So they are taxable by income received from all sources within the Philippines, such as interest, cash, rent, salaries and wages, premiums, annuities, remuneration, emoluments, casual gains, profits, income, and capital gains. So they are only taxable all the sources, all the income from the Philippines. Okay. Next, We have special employees as repelled under the train law. So we have two, the special alien employee and the special Filipino employee. For special alien employee, they are alien individual employed by the following: regional or area headquarters and regional operating headquarters of multinational companies. They are also employed in offshore banking units. They are employed in petroleum service contractors or subcontractors. How about for special Filipino employee? They are Filipino employees uh, of the above the regional area or headquarters or technical position. So as mentioned kanina, no? So they are employees of regional or area headquarters, regional operating headquarters, offshore banking units, petroleum service, contracts or subcontracts. So, but they are Filipino. And then yung isa naman, they are alien. Okay? So note, preferential tax rate for special employees shall apply only to income derived prior to 2018 taxable year or prior to the effectivity of RA 10963, the train law. No? Special employees under train law are now subject to graduated income tax rate on their compensation income. So take note of that. So they are only no taxable, apply only to prior to 2018 taxable year. Okay? Okay, so let us now check whether you know how to classify the taxpayers as resident citizen, non-resident citizen, resident alien, or non-resident alien engaged in trade or business in the Philippines. So we have some illustration. First illustration. Mr. Wing Regryan, an Italian. So Italian means he is not a citizen of the Philippines. Okay, left the Philippines on September 15. So he left the current taxable year for a vacation trip in the US. Before he left, he had secured a re-entry document. So what is his classification? Okay, so he is a resident alien. So because he stayed in the Philippines for more than 180 days, and then he has a re-entry document. Next, Mr. Riz Chuan, a citizen with resident in Cebu City, stayed in Singapore, so citizen, for 1,250 days during the current taxable year. So, very clear. Ano siya? A non-resident citizen because he stayed in Singapore for 250 days, so more than 6 months already staying in the Singapore. Okay, next. Ms. Recently, a non-resident alien, entered the territorial jurisdiction of the Philippines as a tourist but stayed in Boracay for 280 days. So, unsa siya? Non-resident alien engaged in trade or business because yung cut-off lang natin is only 180 days. So, more than that, engaged already in trade or business, no? Especially for the non-resident alien. Next. Miss Angel Lu, a registered nurse who worked in St. Luke Hospital, Manila for 2 weeks only, went back to US thereafter. So, he came from the US, worked in Manila for 2 weeks, so appointment lang, no, for 2 weeks. And he went back. So, what do you think? Okay, a non-resident alien not engaged in trade or business. Next, Mr. Lito C., an alien individual who was hired and got employment in regional operating headquarters of multinational company. So, he is a special alien employee under the new trade law. Okay, next. We will discuss the basic tax or the regular tax or the normal tax. So, again, we discussed this in our previous recorded discussion. So, let's recall it first, no? The general principles here is income subject to basic tax is reflected in the income tax return of the taxpayer. So it is the payee, the income earner, who has the responsibility to file the return and pay the applicable tax. Our formula is here, gross income. So you list all the gross income depending on whether the the taxpayer is a resident citizen, a non-resident citizen, a resident alien, a non-resident alien. So you list it all. Less allowable deductions. So recall the allowable deduction before. So that is your taxable income. And then from that, you will put the progressive rate, no? Because this is for income taxpayers, individual taxpayers. So progressive rate under new train law. So that is your basic income tax. So your gross income includes all income not subject, take note, not subject to final withholding tax and not consider those exempt under the law. So recall yung previous discussion natin. So what are the allowable deductions? So business expenses and losses. So classification of business expenses. We have the itemized expenses. So we already discussed that time. We have the optional standard deduction, the 40% based on the gross sales or receipts for individual, while for corporate, but we are not discussing corporate here, based on the gross profit, no, after deducting the cost of sales for the corporate, but for individual, based on the gross sales and receipts. Okay. Next, you will also deduct the government regulatory premiums, the SSS, the PhilHealth, the Pag-ibig contributions. So those are the allowable deductions for your gross income. You deduct it from your gross income. Next, minimum wage earners. As a rule, minimum wage earners are exempt, no, from income tax on their minimum wage, on holiday pay, on overtime pay, on night shift differential, and on hazard pay. So they are exempt on it. No? So under RR 10/2008, MWE or minimum wage earners receiving additional compensation such as commissions, honoraria, French benefits, benefits in excess of the allowable statutory amount of 90,000 taxable allowances and other taxable income other than the statutory minimum wage, overtime pay as mentioned kanina, no, shall not enjoy the privilege of being a minimum wage earner, and therefore his or her entire earnings are not exempt from income tax. Okay? So if that MWE, no, naka-receive, no, ng mga honoraria, commission, etc., and then excess of that 90,000, so subject na siya, no, for income tax. However, in the case of Soriano versus Secretary of Finance with GR number 184450 promulgated by the Supreme Court on January 24, 2017, it was held that nothing to this effect can be read from RA 9504. Hence, such minimum wage earner shall still enjoy the benefit of being exempt from tax on compensation income. So, yun ang sabi ni, based on the case, no? Minimum wage earner with additional business income and compensation income as minimum wage earner is also exempt. So, ang taxable lang niya is the business income. But for his compensation income, they are exempt. Okay. How about determination of basic tax of married individuals? So, requirement in the filing of income tax return of married individuals. So, married individuals, husband and wife, they are required by law to file a consolidated income tax return, but they shall compute, no, separately their individual income tax return. Income which cannot be definitely attributed to or identified as income exclusively earned or realized by either of the spouses, the same shall be equally divided between the spouses for purpose of determining their taxable income. If the spouses are only physically separated and there is no legal separation, they are required by law to file consolidated or joint returns for which they are considered as jointly and severally liable to tax. So, for married individual, i-combine talaga, no? Consolidate. Income from your wife and income from your husband. Consolidate. Okay? Since it's part of the requirement, you need to identify exclusive income and the conjugal income. But here, based on the income tax, you just identify exclusive income for each spouse and And if they are, you cannot determine whether it is exclusive, you just divide it equally. Okay. Okay, now let's go to the taxation of non-resident alien not engaged in trade or business. So all income within the Philippines, except interest income from FCDU, or we call Foreign Currency Deposit Unit, received by a non-resident alien. So take note, the classification of non-resident alien not engaged in trade or business is subject to 25% final withholding tax, except for the following: interest from a depository bank under the expanded foreign currency deposit system, because they are exempt, and sale of real property and shares, which are subject to capital gain tax. Okay, and recall also for our capital gain tax, how much is that percent? 6%. Okay, next. Taxable estate and trust. So they will be using BIR form 1701. So we have taxable estate and taxable trust. So for taxable estate, it refers to the properties, rights, and obligations of a descendant that are not extinguished by his death, that which is subject matter of succession. So under judicial settlement, treated as individual taxpayer. Under extrajudicial settlement, they are exempt entity. So take note of it now. Judicial settlement and extrajudicial settlement. So judicial, individual. Extrajudicial, exempt. So illustration. The estate of Mr. Ong has 1,800,000 gross income before business expenses of 300,000. The administrator of the estate distributed 500,000 to the heirs in accordance with Mr. Ong's will. So how much now is the taxable income? So your answer would be, your gross income is 1,800,000 less the regular allowance deduction, which is the business expense of 300,000, and the special allowance deduction, yung distribution to heirs. So our total deduction is 800,000. Our net taxable income is 1 million. How about trust? Taxable trust. Trust is an agreement whereby one person, grantor or trustor, transfer property to another person, beneficiary, which will be held under the management of a third party, the trustee or the fiduciary. So when we say trustee, refer to someone who manages and preserves the property. Grantor refers to the property owner who established the trust. Beneficiary refers to the person entitled to succeed and receive the trust. Okay? It's only applicable especially if it is yung mga beneficiary, mga ano pa, not yet, mga minor age, no? So it's also applicable. You need also to classify whether it is a irrevocable trust or a revocable trust. When I say irrevocable trust, they are treated as individual taxpayers. No, and for revocable trust, they are non-taxable entities. So, ano ba itong revocable? Revocable, it can be transferred. So, it can be transferred to another, while irrevocable, it cannot be transferred. So, yan ang ating differentiation ng irrevocable and revocable trust. So, illustration. Mr. Ang designated a trust property that is irrevocable. Okay, so you treat this as individual in favor of Mr. Ong and appointed Mr. Te as trustee. The property earned 800,000 income before expenses of 300,000 and there is a trust fee of 50,000. Okay. Mr. T distributed 150,000 to Mr. Ong in accordance with the trust indenture. Compute the taxable income. So we have the income from trust, 800,000. They have also the regular allowance expenses, the business expenses of 300,000, plus the trust fee of 50, so 350, and the special deduction which is distributed to the beneficiary. So all taxable, all deduction is 500,000. So your net taxable income is 300,000. Next, employed taxpayers. So for employed taxpayers, they are they have this substituted filing of tax returns. So what are the conditions of the substituted filing system? An employee who received purely compensation income during the year. So wala siyang mixed income. An employee who received the income from only one employer in the Philippines during the taxable year. The amount of tax due from the employee at the end of the year equals the amount of tax withheld by the employer. The employee's spouse also complies with all three conditions stated above. The employer files the annual information return, and the employer issues BIR form number 2316 to each employee and employee uses. Okay, so they will not file again another BIR no, kasi they are subject already for substituted filing system. So no need for you to file in the BIR. Okay, naka-substituted filing ka naman. Okay. The employee will file the BIR form number 1700 or the ITR. Okay. Consolidated annual adjustment income tax return. So concurrent employment during the year, if you have multiple employment, so you need to consolidate it. If you have successive employment during the year, consolidate it. If you have receipt of income distribution from a general professional partnership, taxable trust, or taxable estate, exempt co-ownership, or exempt joint ventures, and the taxpayers with both employment income and business income. So you need to consolidate your income tax. So except only for yung purely compensation income, no need na, no? Kasi they are subject for substituted filing. Who are required to file income tax returns? So we individuals and non-individuals. BIR 171700 or BIR 1701 for individual. For non-individual, BIR form 1702. So resident citizens receiving income from sources within and without, like employees deriving purely compensation income from two or more employers concurrently or successively at any time during taxable year. Employees deriving purely compensation income regardless of the amount, whether from a single or several employers during the taxable year. Self-employed individuals receiving income from the conduct of trade or business and or practice of profession. Individuals deriving mixed income, compensation income, and income from the conduct of trade or business and or practice of profession. Individuals deriving other non-business, non-professional related income in addition to compensation income but not subject to final tax. Individuals receiving purely compensation income from a single employer, although the income of which has been correctly withheld, but whose spouse is not entitled to substituted filing. And then, a trustee of a trust, guardian of a minor, executor, administrator of an estate, or any person acting in any fiduciary capacity for any person. Okay? Whether such trust, estate, minor, or person is engaged in trade or business. The non-resident citizen receiving income from sources within the Philippines, and aliens, whether resident or not, receiving income from sources within the Philippines. They will file ITR BIR number 1700 or 1701. For non-individual, corporations including partnership, no matter how created or organized, domestic corporations receiving income from sources within and outside the Philippines, foreign corporations receiving income from sources within the Philippines, and estate and trust engaged in trade or business. So they will file income tax. How about who are not required to file income tax return? So we have the minimum wage earners. An individual whose gross income does not exceed his total personal and additional exemption. An individual whose compensation income derived from one employer does not exceed 60,000 and the income tax on which has been correctly withheld. Individuals whose income has been subjected to final withholding tax, such as case of special aliens and the non-resident aliens not engaged in trade or business. Okay, and pure compensation earner, who are qualified under the substituted filing system, so they are not required to file income tax every end of the year. Okay, So, an individual, estate, or trust not engaged in business or those earning pure compensation income with sole earnings subject to final tax or whose sole income is exempt, so they will be using BIR 1705 on or before May 15 of the following year. For self-employed individuals, estate, and trust engaged in business, they are using BIR Form 1701 AIF. For corporation and partnerships in general, they will be using BIR Form 1702. So note, person whose gross quarterly sales, earnings, receipt, or output exceed 150,000 may file their ITR accompanied by balance sheet, profit and loss statement, other relevant statement duly certified by independent CPA in layo of BIR Form 1701 and 1702. Okay? If they exceed 150,000. Next. Pwede din, no? We can install our payment of our regular income tax when the tax due is excess of 2,000. So, your first installment, the time the return is filed, and your second installment would be on or before October 15, following the close of the calendar year. So, our tax return, we are using progressive tax rate. Okay? So, under January 1, 2018 until December 31, 2022. This is our progressive tax rate. So for taxable income not over 250,000, 0% yan, no? And then, tumaas until 8 million. Okay, but on January 1, 2023, medyo bumaba ang ating rate. Still, yung exempt is the 250,000. Pero kung more than na, 15%. So, mas bumaba siya, no, compared to the previous one. But this is effective date of January 1, 2023. So, under the new train law. Again, this is only for individual. We are using progressive tax rate. But for corporation, iba naman, we have fixed rate. Okay, self-employed taxpayers and quarterly tax returns. So we have some deadlines, no? For first quarter, the deadline is May 15 of the same calendar year. For second quarter, August 15. First quarter composed of January, February, March. Okay? So, naglapse ng another 2 months. January, February, March, April, May. So, May 15. Second quarter, composed of April, May, June. So, pagitan natin 2 months, no? Magbayad sa August. Third quarter, November. So, ano yan? July, August, September. October, November 15. But our annual ITR, April 15 of the following calendar year. So, illustration. Mr. Custodio, a self-employed taxpayer single with 6 children. Before kasi, emphasize pa yan how many beneficiaries. Pero ngayon wala na, no? Wala na yung mga pila ang allowance for the children. Has the following cumulative quarterly gross income and deductions. So, self-employed from January to March until to October to December. So, determine his quarterly and annual income tax due and payable. Okay, so gross income, your deduction, we put it in. That is your net income this quarter. If there are additional income prior quarter, you put it. Okay, but wala man. So, your income tax due here based on the progressive rate. Progressive rate, no? Tanawon to nimo tong progressive rate dati. So, how will you get the 10,000? So, 250,000, wala pa, zero yan. Excess of it, 20%. So, your tax due is 10,000. Less the withholding tax. And then, prior quarter also, 7,000 ang ating payable for the first quarter. In the second quarter, you put all the gross income for that quarter and the deductions. Okay? Net income for this quarter is 200,000. Add the income prior quarter, which is 300,000. So, your income to date is 600,000. Next. Kasi progressive rate tayo. So, look on the table. So, your tax due is, we have, pila man ang tax due ini? 80,000. Okay, 80,000 tax due for the second quarter. But we have withholding tax, 5,000, and the payment, no, prior, or withholding tax before, in the prior year, 3,000. So total 72,000 less the tax paid from previous quarter. So your payable is 65,000. For the third quarter, okay, put all the gross income and deductions. Add the net income prior quarter. So, yung prior quarter natin is 600 from first and second. Okay? So, look on the table again. 900,000 tayo. So, the tax due on, ano ba? Sana ito. So, income tax due natin is 160,000. Ito, no, nagkamali siya, no? First, 800, 130. On excess of it, 30. So, plus dapat yan, 130 plus 30. So, nagiging 160,000. Yan, no? The left side of your screen. Na typo lang ito, typo error. Okay? So, 160. Less the withholding tax sa July at to September, 8,000. Less the prior years, 8,000 prior years, 5,000 from second, and 3,000 from the first. So your total is 144,000. Less the payment, yung previous 65 plus 7, that is 72,000. So your payable is 72,000. And then on the last quarter, you put also your gross income, your deductions. Net income for that quarter is 360,000. Add the income prior quarters, okay, 900,000. So your net income to date is 1,260,000. Okay, and then look on the table again, the progressive rate. So your tax due is 268,000. Less the withholding, 10,000. Less the tax prior quarter, we have 16,000, di ba? Okay, from third quarter, 8,000. From other quarter, we have also 8,000. So, 16,000. So, total is 242,000. And then, payment from previous quarter, from first, second, third, 144,000.